Welcome back to the channel. In today's video, I'll be breaking down the order block concept from ICT trading in a simple and easy to understand way. So even if you're new, you'll get it clearly. So first, I'll show you what an order block is, how it looks, and how it's used in different market scenarios. An order block is simply a series of consecutive up-close or down-close candles in a trending market. It works best when you align it with your draw on liquidity and use it within the premium or discount zones, depending on your direction. Now, let me show you an example of a bearish order block. So first, let me show you what a bearish order block is. Basically, it's a series of consecutive up-close candles in a bearish trend, or it can form after a liquidity sweep. Check this out. We have a buy-side liquidity sweep, then a shift in market structure downward, and a single up-close candle forms. That candle becomes our bearish order block. Notice how the market retraces back to it and then continues its downward move. Now let's look at a bullish order block. A bullish order block is a series of consecutive down-close candles in a bullish trend, or it can form after a liquidity sweep. Here we have a sell-side liquidity sweep, followed by a market structure shift to the upside, and then a single down-close candle forms. That candle becomes our bullish order block. You'll notice the market retraces back to this block before continuing its upward move. Alright, let's jump into the charts and check out some real examples of order blocks. Alright guys, let's jump straight into the chart. First thing we'll mark out our 15-minute liquidity levels and simply wait for the market to take out one of them. Now notice here, the market has just taken our buy-side liquidity. So what do we do next? We drop down to the 1-minute time frame and look for a bearish confirmation. You can see right here, we've got a shift in market structure. Perfect. Now it's time to look for an order block. We've got one here and another one here, but remember, we always choose the order block in the premium zone because we're looking for a short setup. Alright, let's see if the market retraces back to that order block. And there we go, market taps right into it. So we enter our short position, stop goes above the high, and target the recent lows. And look at that. The market respects our order block beautifully and hits our target cleanly. Now let's move to the next example. Once again, we've got our buy-side liquidity swept, a shift in market structure, and two up-close candles to the left. That forms our bearish order block. We enter short, stop above the high, and target the recent low. And once again, a clean reaction, clean target. Simple and effective. Next example. Here, the market sweeps our 15-minute sell-side liquidity, so we drop to the 1-minute time frame and wait for that structure shift. Now we've got it, and if you look closely, there are two small down-close candles to the left. That's our bullish order block. We take a long entry, stop below the low, and target the recent high. And again, super clean move, straight to target. Alright, now for our final example. Here, the market sweeps the 15-minute sell-side liquidity, but notice, price has already moved quite a bit toward our buy-side liquidity. Still, we can see a nice 15-minute order block, so we'll mark that out and wait to see if price retraces back into it before taking the buy-side liquidity. Now we drop to the 1-minute time frame and look for a liquidity to sweep. There's a swing low inside that 15-minute block. That's our sell-side liquidity. We wait for the market to take it out, and boom, it does. We get a down close candle and a shift in structure, So that's our entry confirmation. We go long, stop below the low, target the highs, and again, clean reaction, quick target. So now you understand exactly what an order block is and how to actually use it in your trading. In the next video, I'll show you how to identify premium and discount zones correctly so you know where to take trades and where not to. And if you want the PDF notes for this concept, they're available on my Telegram and Discord servers. Links are in the description below.